This is Razan Hilal, Market Analyst with Forex.com. Today is February 24, 2026. Please take a moment to go over this 1 minute disclaimer before we go over key charts today between Bitcoin as it navigates pressure near the 60,000 mark, crude oil as it attempts to break out of a 2.5-year bearish structure, the US dollar index between tariff uncertainties and geopolitical tensions, the recent gains on gold and silver, and US indices. Okay, time is up for the 1 minute disclaimer. I'm going to start first with the Bitcoin chart from a weekly time frame perspective. We can see that Bitcoin's price action following the record highs in October 2025 and near the 126,000 mark possibly completed a full corrective cycle with following a bearish wedge extending on the charts between November 2025 and January 2026, where we have potential full pattern target completion down to the 60,000 zone, where we had a dip buying interest for investors that realigned, but we eventually realigned prices back with the 60,000 zone. Now, a clean hold below 60,000 is expected to extend the drop down towards 57,000 zone initially, which was a previous support to price action between March 2024 and September 2024, with potential extended wicks as well should we close below that between 52,000 and 48,000. Now, if you look at the relative strength index indicator, we can see oversold, we can see oversold levels last seen in 2022, where price action was near the 15,000 mark, which is also raising risks for potential dip buying or reversal near these critical zones. Next up, we have the US dollar index. Now we can see from a weekly time frame an extended wick over here, which reflects the inability of bears to sustain these lows, with bulls also gaining strength, with that possible bullish engulfing pattern also in play from a weekly time frame perspective. Now, if you look at this whole setup from a monthly time frame, we can see that the price action is holding at the bottom bound of an uptrending channel between 2008 and now extending through 2026. So we're currently sitting at a bullish hold, or we can see a bullish to neutral hold for the US dollar index, as long as it holds above the 96 to 95 mark, which is keeping pressure against major currencies, including the euro, the pound, and the yen. Now, should we close further above this critical line, which was a previous support to price action between Feb 2023 and September 2024, and now at resistance to price action through 2026, it is near the 99.50 mark. Being close above this level and the 100 mark is expected to extend gains all the way in line with that primary uptrend and capping further gains across major currency markets. So this is the outlook for the US dollar index. The primary structure holds despite the day-to-day swinging volatility and headlines on the charts. Now, next up, we have gold chart. I'm going to go down to the daily time frame, where we're currently assessing the bullish rebound in gold chart following the extended drop between the 5,600 record down to the 4,380 mark. Now, this bullish bound reached the 5,250 yesterday, near the 5,290, which is a key golden 618 Fibonacci extension for that overall bullish rebound, which is creating a resistance for prices. A clean hold above this level or above the 5,300 mark can revive these bullish pressures on the gold chart all the way up towards the 5,400 and 5,600 once again. Now, further upside potential above the records of this year. I will explain it in the next gold chart on a 3-month time frame perspective. Now, from the downside, the key level here is the 5,100. A clean hold above this level is expected to extend drops all the way down back towards that consolidation zone, which was supported by the 4,800 mark. This level, if it gives way, exposes a deeper drawdown towards the 4,660, 4,530, and the 4,380, where we had a previous dip buying interest. we can either see another dip buying opportunity here or a steeper drawdown that might extend on the charts for possibly another 1,000 point magnitude. Now, if you go up to the 3 month time frame to explain this setup in a more clear perspective or in a clear perspective, we're currently assessing the steep breakout or the parabolic breakout of gold prices beyond the bounds of a consolidation that extended on the charts between the 1980 and 20 and the end of 2024. So this steep breakout is raising risks for a potential a steep corrective cycle in line with extreme 3 months overbought relative strength index or momentum conditions, which align with levels or highs that previously preceded extended drawdowns on the charts. So if you do manage to have a clean hold below 4,400, we can be expecting a possible drawdown to 3,900. More extreme case scenarios to 2,900, aligning with the upper bound of that consolidation for potential dip buying or momentum reset before gold prices can realign back within their primary uptrend. Now, the bullish scenario is a close above 5,400 and 600 that can extend gains to the 6,000 threshold and 6,800 from a nearer term perspective. From a long term perspective, and for the years to come, the potential of this breakout can reach up to the and beyond the $10,000 an ounce. So, from the silver charts perspective, we see a very similar setup. From a silver perspective, we can see also an unsustained wick over here where bulls were not able to sustain prices near the 120 mark uh, for silver, and we're currently also holding above the 64 support. Now, a clean hold back below the 75 and the 64 levels can extend losses for silver also to the upper bound of that consolidation between the 1980 and 2025, which is near the 50 to the 48 zone for potential dip buying opportunities as well. As long as we're staying above that consolidation, we're in a bullish zone for long-term silver prices. If we close below it, then those forecasts are expected to change. Now, from the upside, should we have a clean hold back above the 100 and the 120 mark, we can be expecting silver prices to reach the 200 from a near-term perspective and from a longer-term perspective also for possibly the years to come near the 600 mark, aligning with the bullish breakout potential of that consolidation. We can also see the extreme overbought momentum for silver from a 3 month time frame as well, similar to gold at highs that previously preceded extended drawdowns on the charts, which is also raising the risk of that uh, drawdown scenario. Next up, we're going to talk about the crude oil chart, which is attempting a bullish breakout beyond the bounds from a weekly time frame, beyond the bounds of an over 2.5 year bearish structure over here, extending from September 2023, really attempting that bullish breakout in a similar scenario to what happened with the previous Middle East escalations back in June 2025. We had a breakout for crude oil prices up towards the 78 mark and then dropping down and closing back within the bounds of this channel. If we do have a similar scenario now that we have rising tensions again between US and Iran over nuclear deals, we can be looking at key levels above 67 near the 70 mark, the 74 and the 78. But we'll watch closely more the closing prices from a weekly perspective of these candles to assess the sustainability of this breakout. A clean hold above these levels is needed to confirm further bullish projections for crude prices that can possibly reassert inflationary pressures across the globe and possibly alter central bank rate decisions. If it does close back within the bounds of this channel, then the bearish bias can reassert itself, especially if you close back below the 62 mark, which can realign prices back with the lower ends of the 60s and the 50s range. That's for crude oil. Next up, we have NASDAQ, where we can see price action pulling back from the 26,000 records for more than 5 times in a row across since October 2025, all through the recent date. We're currently seeing price action holding above the 24,600 mark. A weekly close below this level is expected to extend drawdown scenarios down towards 24,300, the 23,700, and further towards the 23,000 or 22,900 mark for potential dip buying opportunities. The extreme scenario can go down all the way towards the previous highs between 2024 and 2025 near the 22,200 mark for potential dip buying opportunities. And this scenario, you can have the relative strength index also drop to potential oversold levels last seen in April 2025. Now, from a bullish perspective, NASDAQ needs to hold above 25,800 and the 26,000 mark, a clean weekly close to be able to extend bullish forecast towards the 27,000 threshold and beyond. That's for NASDAQ, and we're going to be ending it with the Dow Jones chart. Now, the initial signal I had for potential bearish implications across US indices for this year was with the Dow Jones chart from a monthly time frame perspective, where we can see a possible diagonal formation following the bullish rebound from the 2020 lows that was not able to sustain a bullish breakout beyond the bounds of that consolidation and beyond the 50,000 mark. We reached a 50,200 resistance and dropped back down. We're currently dropping now below the 49,000 mark on risk of market appetite. So a clean hold below the 48,700 can extend losses possibly down towards the 47,600, 46,800, and down towards the lower bound of that consolidation between 45,700 and 45,000, which is also the steep case scenario, the previous highs between 2024 and 2025 for potential dip buying interest. If not, this formation can open the way for a steeper drawdown on the charts that can also possibly be correlated with the broader markets for a potential broader momentum reset. We can also see the momentum at overbought levels last seen in 2024 and 2021 that preceded extended drawdowns on the charts, which is also adding to the risks of potential corrective cycle. Now, a clean hold above 50,200 is expected to remove that bearish scenario and reassert a bullish scenario on the charts, possibly extending gains to the 53,700 to the 54,000 mark and beyond. As I previously mentioned, I'll be taking questions at the end of the webinar due to the 15-minute time constraint. Thank you so much for attending the Market in Focus webinar. We'll have this recording posted on LinkedIn and our YouTube Forex.com pages. And of course, please register and we'll meet in the next live webinar. Happy to take your questions after the disclaimer.